Hey, welcome to our Market of the Moment update for the week of January 2nd, 2023. Michael Oldham with the Oldham team, Chris Madrid with Caprock Home Loans.
Hey,
What's up, Chris? Happy New Year.
happy New Year. Yeah, man. It's upon us. It is upon us.
Cool. We are getting back together. I think our last one was about the week of January 22nd, right before Christmas. So we're jumping back on to start off the year.
December 22nd.
Anyway, let's get rolling. Chris Madrid, Caprock Home Loans, gonna give us a little update, current mortgage rates. We're gonna go over some charts and look at 2023.
Yes. Yeah, man, this week has been interesting for sure. As of today, right? We're talking about today. Rates are slightly higher. So you can still get, depending on whether you want to pay points or anything like that, you're looking at, 6.25 to about 6.6 is probably the range that we're in, up from about 6% where we were when rates came down a week or two ago. So still lower than the highs, right? Still lower than that 7.5 that we were at before November 10th. But yeah, on a 30-year fix, you're looking at 6.25 to maybe about 6.6, assuming good credit. There's still really good options for FHA, VA. Those are down closer to the 6% range, 6 to maybe 6.25, and then 15-year, right? If you're wanting to finance on a shorter timetable, 15-year are probably that 5.6 to about 5.9, something like that. So under 6, but just not as low as they've been in the past. So man, thankfully rates are trending down, like we've been saying this entire time, not in a straight line.
Yeah.
Right. So that's not going to, we're not going from 7.5 to 5% overnight. It will be, there will be some ups and downs like we're seeing this week. Some of the news that was coming out this week was mortgage applications. The Fed minutes came out yesterday. Job cuts, the ADP employment report, and then the big one for tomorrow is going to be the jobs report. So that'll give a little bit more indication. But yeah, a couple of the couple of things we'll still, I fully expect this year for for rates to be below 6%. Now again, is that going to be in the spring for the spring market or summer? That's the unknown. There's still obviously a lot going on in the world economy. We are seeing inflation come down, right? Contrary to what the Fed said yesterday, inflation is coming down. So those are the good things. Those are the signs that that mortgage rates will also come down with it. One of the things that I wanted to share was the home price index that came out this week, indicated that home prices, right? We saw just a modest decline of 0.2% in November, which essentially takes the home prices index from it was at 10.1%, right? And of course that is now down to about 8.6% year over year. So again, that's a 1.8% decline, right? In home prices, a whole lot less than the 10, 15, 20, 30% decline that you're hearing all over the media. And that's essentially, again, that's from the peak of where home prices were, and that was considering mortgage rates at 7%.
Yeah.
Right. So again, there's the actual data, the facts show that it's not as bad as some would think. NAR, right, which is the National Association of Realtors, reported that pending home sales, which are contracts on existing homes, dropped in November, but also noted part of that was because of the higher mortgage rates, and with mortgage rates falling, they fully expect home buying activity to rebound in the coming months, which is obviously things that you and I talk about as well.
Yeah, no, Tuesday we were talking about, if these rates do drop to, the low 5s, mid 5s, some people are going to see that as half of what they were, even though they're a couple points off what they were. They're still going to psychologically, I think, look at it as, oh, it's half of what it was a few months ago. And
Yeah.
yeah, we were kind of talking about that feeding frenzy that possibly could happen when that, does go down. And when we look at our stats for, Metroplex counties, we're going to see that inventory has ticked down, since our last time we even talked. So with inventory ticking down and the rates going down, that all kind of feeds into another feeding frenzy in the
Yeah,
housing.
the last thing I'll share too is, First American's chief economists predict that if mortgage rates continue to fall, just like you're saying, household incomes stay flat and home prices plateau as expected, affordability is going to improve as well, right?
Yeah,
So, and they're predicting like it's going to improve by 9% by the end of 2023. So those are things that are great, right? I mean, those things are great for home buyers, but also, if you're barely again, if you're barely qualifying at 5%, let's say, and we do get back to a seller's market and you're having to offer 5, 10, 15, 20% over list, that's where it gets difficult. So that's, again, we can't, and I can't say it enough, that the best time to buy is yesterday, right?
Yeah.
Or today at the very least. So anyway,
You ready to look at the charts?
yeah, man. Yeah. So this will give us a good little outlook, where we are today. So, yeah, that big green candlestick on the kind of the left side, that is November 10th, where we saw the inflation numbers come out, significantly lower than what they had been. So that has put us on the upward trend of mortgage-backed securities and a decline of mortgage rates. So, that has been great. But again, you can see throughout, November, December, end of December, it has also kind of, we gained a bunch and then we've lost some with, obviously Fed policy, the Fed minutes from yesterday that came out. A lot of the people on the Fed are still saying, hey, we're still going to, and we're still planning on continuing to increase the federal funds rate, which, if they continue on with their plan to move the federal funds rate up, they'll definitely push us into a recession, which means, obviously, job cuts. I think Amazon announced today that they're laying off like 18,000 people, right? So that's, there is such a thing as them kind of going too far, right, and pushing too hard, to bring inflation down. So anyway, yeah. So I mean, pretty normal as far as the market goes. We're still, again, we need to see this back up into the 102 section. Probably 101 and a half, 102 to kind of get that 5% number. So yeah, hopefully we're on track for that.
I know when we've talked in the past, obviously when we got down below the 100 and below the 99 mark, obviously, we were talking at that point that we need to go 102 mark to get back down in the fives. So we are trending that way. Like you say, pretty much every week, it's going to be a up and down, but it seems to be trending up as it's ticking. So I would think that's a good sign.
It is. Yeah, it's a great time.
So, all right. Anything else to share before we move on to our real estate numbers?
No, man, that's all I got.
All right. Well, there's a ton of real estate news out there. You can get it anywhere: Facebook, Twitter, Instagram. It's just going to be a matter if it's your local facts or not, or if it's just clickbait to get you to look at something further. So if you want your real news, reach out to Chris and I. You can reach us 469-369-0873 if you have housing and real estate needs. If you want to talk about financing, those types of things, you'll want to get in touch with Chris, 214-734-1531. Of course, if you start with us, we're going to send you right to Chris Madrid to get started. So you got anything to add today, Mr. Madrid?
No, but man, the only I say no, but then I always have a little nugget. if we're talking a 3 to 5% appreciation, right, this year, if you purchase a $400,000 house and put 10% down, right, 3%, you're going to gain $12,000 in equity. And I don't know, man, I don't know about you. I mean, $12,000 isn't anything to, to turn your nose up at. If you, again, if you're trying to build wealth, right?
Yeah.
And not to mention the other advantages of owning a home, being able to write off your property taxes, being able to write off your mortgage interest. So there's just those major benefits that sometimes we forget, right? We just don't, maybe we don't talk about it enough. Or, obviously educate, our customers enough, but there's still those massive benefits from a tax perspective, and then from just a building wealth perspective.
Yeah. And if you're somebody out there that is renting, now is the time to get your things in order, get into a home, because that rent is just going to keep going up. There's no doubt about it. Your mortgage, you can at least set it for 30 years for the most part. So, all right. Well, we're going to get off of here. Great seeing everybody. Great seeing you beginning of the year, Mr. Madrid.
Absolutely.
So, all right. Well, we'll see you guys the next week.
Next week.